Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. Welcome to the NFP day. And today, yes, we're gonna get the final job number because again, this week we were getting JOLTS, we're getting ADP. I'll talk about all that in a bit. So yeah, stay tuned. Hopefully you enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Friday. It's a regular Friday. Well, it could be, but it's not. Well, it's Friday, the NFP day, and yes, everybody's waiting for that number because we had a bunch of US job numbers already, like JOLTS, ADP, which I'll jump in a bit. And yeah, to finish off this whole package, we're getting the NFP. Look, before we jump into any action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yeah, I'm gonna do my usual good morning in the chat room, ladies and gentlemen. Good morning, everyone. Good morning, everyone. Yep, that is correct. So, look, what can I say? Today is Friday. Today is the 5th of September, 2025. Still, we finished off with summer. We have already finished off with the first week of autumn, fall, whatever you want to call it. But anyway, you got the picture. Anyway, so yes, let's see what's happening. But first of all, as always, let's quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at what's happening. Actually, not in the indices first. Let's have a look at what's happening in the economic calendar. So today, Friday, let's have a look very quickly. This morning, we already got some UK data, and we did get the retail sales. Why it's not updating for some reason? I need to refresh the page most likely. So yeah, look at this. We got the retail sales numbers from UK. I wouldn't say, okay, they're okay. You know, it's not like something great. Yes, they're better than the previous, but the forecast was a little bit on the higher side. The month-on-month figure, however, was a much better number. And okay, that's fine. Look, seems to be that the UK consumer is still okay in terms of shopping. You know, like I think everybody's now getting ready for Christmas and stuff. Like honestly, you're not going to be surprised. And you know, in UK, you get these advertisements already, like at the end of September, like October. You know, prepare yourself for like Christmas and stuff like that. Well, you know, whatever helps the consumerism, right? Whatever helps retail sales. So yeah, and let's have a look at the so Halifax house price index year on year, it dropped a little bit. So okay, that's interesting as well. So the housing market is experiencing a little bit of a down move, and to be honest, that's not something extraordinary. That's something that is now common. We're seeing house prices drifting a little bit to the downside because maybe the interest rates are not that attractive, and they might not be in a closed period, in a closed time. But nevertheless, yes, what we're seeing right now, it's it's a little bit of a decline here. Look, still higher than the forecast. The forecast was a much lower number, but it's okay. 2.2, steady decline. Let's have a look at this one. Yep, there we go. We were at 3.2 in May here, and look at this. We have been declining so since then. Anyway, going further today, we get the European GDP growth rate, the estimates, together with the employment change number. So if you're trading something EU related, then keep your eyes on that. But of course, the main topic, the main focus that's going to happen here will be on the US and Canada job numbers. Let me just adjust this very quickly. So look, for now, what I'm seeing here, of course, is a worrying sign. I'm talking about the U.S. numbers right now, because look, let's start off from Wednesday. JOLTS, we got JOLTS. Those came out a little bit as a disappointment here. There we go, 7.181 against the 7.4 forecasted. And what's interesting here is that the previous number was actually higher than the forecast. It was a 7.4, something higher, like 7.45 or something, 0.47 or something like that. So, but anyway, it got adjusted, and now it kind of became that the forecast was to the higher side, and it doesn't look that bad, right? So we dropped the previous, so we don't have really that big of a discrepancy from the actual number. However, still it's a worrying sign. The number continues to decline, and that's not a well. Actually, the number is jumping around, but still with a trajectory to the downside. Let me just jump into this very quickly. This is what I'm talking about. Look at this. I talked about this previously, and look. For now, it's the worrying sign, the one that I was talking about. Since 2022, beginning of 2022, when we were sitting at around like 12, million, 11 million jobs created here, we are seeing basically a major decline, and I would say quite a rapid one as well. We had a rapid acceleration, and now we're having a rapid decline. Somebody might say, but hey, maybe this is just the norm. It's like adjusting to this rally, this big rally. In a way, yes, we could say that, but whenever whenever we're going into the market, and when people kind of whenever we shift a little bit further away from previous numbers, we accept that as the new norm. For example, we could say gold is way too overpriced, right, because of comparing it to where it was a few years ago, but it's the new norm. 3,500 and above, that's kind of the new norm. The 4,000 mark could be the new norm. So that's what I'm saying. So we're adjusting as we go, and at this point, looking at the recent history here, this doesn't look very pretty, and the fact that it could actually drop further, that's something that's worrying the market, the U.S. labor market. And speaking about other U.S. numbers, look at ADP. Bummer. A big bummer here. Look at this. It came out at 54 against the forecast of 65. The previous number got adjusted a little bit here because it was at 104 and it got adjusted to 106. Yep, and the forecast was at 65. And there we go, 54. Another disappointing number. Let me just launch the chart here. Another kind of issue that we're seeing here, look at this, has been drifting lower. We were at the around mid-2021, we were around 1 million. Now we're, as I keep on saying, now we're barely struggling to hit that 100,000. And going further, let me just go into the economic calendar again, and going further, going today into today's data, into today's NFP reading. Where's that non-farm payroll? There we go. We're also expecting to see not a huge number. Yes, better than the previous, but again, we know that the previous has been adjusted several times, and it doesn't really look good. And by the way, the new number here will be, or today's number will be with the new Bureau of Labor and Statistics person in charge. So we'll see what kind of an adjustment we will get for the previous. I somehow doubt that we're going to get a major adjustment, just because the previous was, where we went from 140 or something to 14,000. So yeah, that was a big blow. But looking at the picture here, yes, the same problem that I'm seeing. We're barely struggling to hit that 100,000 zone. I mean, I'm not already talking about going back into 200s. That would be like, wow. People would be saying, oh my God, that's like super awesome. The great number, 200,000 K. But if we look at just 2023, we were at almost like 500. We were like 300. That was a norm. 400. That was a norm. If we're talking about 2022. We were talking about like 600. That was a norm. So again, you see, this is like we adjust our perception, we adjust our kind of views as we go along, and that's why maybe nobody's kind of hitting the alarm bells, yet. But certainly it is. We are at an interesting spot here, and for me, what I'm really curious about is to see a move, kind of dropping below zero. Actually, let me just see if I can adjust this very quickly. Coordinates, there we go. Let's put it at 0 here. So that's what I'm talking. So this is what I'm looking at. So if we somehow drop below 0, I think that this is where the issue arises. And I think that this is where, at the moment, people should start thinking that, look, we're not, in the US, they're not really maybe firing that much. There are layoffs, but the unemployment rate remains kind of steady. Yes, it is expected to increase a little bit. We're expecting to see a jump from, this is Canada, sorry, from 4.2 to 4.3. That's, of course, not very good, but not critical. But the problem is, like I said, the unemployment rate remains the same, but we're not creating much jobs. So in the U.S. And that's where the kind of the issue arises. And in a way, of course, I already mentioned this in my Wednesday's video, and in my other videos as well. I talked about this. That look, of course, part could be maybe attributed to AI, to developments in AI. Again, I don't want to sound that grandpa who's going to be saying that, oh my God, like AI is bad and stuff like that. No, again, depends on how you use it. I think that's nobody likes the word depends, but unfortunately, it depends. And that's where the issue, like I said, arises. So, for example, you have a lot of people in work, but new jobs are not created because certain jobs can be now done by AI, and especially entry-level jobs. So if you're not a specialist, if you didn't manage to get yourself into that point, and when you're a specialist, now to get an entry job, again, depends where. If you're looking for an office job, like call centers or something like that, then it's becoming a little bit more difficult. So I think that people need to start thinking of shifting towards some areas where, let's say, they don't feel very comfortable with, let's say, or something like more manual, more manual labor driven. And look, don't get me wrong, it's like everybody's thinking that, even I'm thinking that, so it's logical, it's understandable. And I think that AI, yes, can substitute us, in call centers or some sort of like IT tasks, but it wouldn't be able to kind of build a house, right? So that's, or like some sort of maintenance work. So that's another thing to consider. So again, at the moment, the problem with those jobs is that, again, they're very like economic sentiment driven, because, for example, if suddenly the market is experiencing a little bit of a downturn, nobody's building, everybody's saving, everybody's nobody wants to do renovations or anything like that. So because people's money shift towards, like, maybe saving or food, or something more bigger necessities. So that's why that's where the issue kind of arises with those jobs as well. Anyway, however, it's all debatable. Because maybe somebody would say, but hey, if somehow you have a big leak in the house, you need to fix that. Well, yes, that's true. But it's doesn't happen super very often. Okay, if it happens very often, then you have a bad house. So anyway, but look, long story short, for now, like I said, the market needs to be very careful we are hitting all-time highs, and I'll jump into the indices in a bit. But given that the job number is like suffering like this, we just need some first reports coming out saying that, you know what, it's really bad, you know, blah blah blah. And I think that that's what, you know, what could drive the market. Look, we're waiting for the interest rate decision as well, and the interest rate decision is expected to come out on the 17th, if I'm not mistaken. Let me just double check here. Yes, the 17th of September, and we are expecting a 25 basis point cut. Now look at this, 99%. We're already like, it's like a given. It's a done deal. And to be honest, I think that this is what they're focusing right now. I think that this is what they're saying, that look, if the job numbers continue to decline, then yeah, we need that, you know, we need that cut. But what you're seeing right now as well in the market is the, you know, the talks about how we need to maybe do a 50 basis point cut rather than a 25 basis point cut. I mean, I cannot extend my high voice anymore, but anyway, so that's what I'm saying. That's where the interesting bit comes in. So, you know, of course, we're not pricing in. However, maybe depending on how this data comes out, maybe let's say if the data comes out on the much lower side today, for example, it comes out at where's it coming out? Let's say it drops below 75 or it gets even closer to zero. We could shift this chart here. This graph could easily shift here. We could see the 50 basis point cut appearing here. The probability for the 50 basis point cut appearing here for the 17th of September. Now, now that's going to be an interesting moment. And so, how could we look at the stock market? Well, at the moment, the stock market here in Japan is enjoying the moment. We're seeing a rally. Japanese stocks are advancing, and from what I see, that the U.S. president decided to lower down tariffs on the Japanese imported cars from 15%. From 27.5% to 15%. And it's a very interesting moment because initially, you know, the guy is trying to play tough, you know, to bring in more funds, which is okay, fine. You know, you do whatever you want to do for your country, but it's an interesting move that maybe the U.S. is trying to get some sort of allies, you know, from, you know, or get like more on better terms with Japan, because they need, you know, U.S. needs Asian support. And lately, you know, from the beginning of this week, we saw the big parade, the military parade in China, and where, you know, where we saw big leaders, top leaders attending. Not maybe very favorable for the U.S. leaders attending the event, and that kind of sends a signal that, you know, the U.S. is getting you know, it's not, I wouldn't say losing its dominance, but just really nobody's kind of bothered, you know. So it seems like you know, it's, if you're behaving, if you're trying to bully me, then I'll round up with other friends and kind of be against you, you know. So it's very simple. So I think that this is what they understand. The U.S. administration now understands, and that's why they're going to be lowering tariffs for those where, you know, they can find friends still. So because they went on this rampage of, you know, tariffs, putting tariffs in all the world, and of course that it didn't really create a lot of friends. On the contrary, so, and that's why you're seeing this shift, this move, and I think that, you know, you're seeing this kind of, you know, reduction of certain rates. I think EU is going to be the next one where, you know, there will be certain things simplified, or maybe on the contrary. You remember that big deal that the EU made with the US? First of all, it's not achievable. I mean, I was talking about that then when this deal came out in August, and I said it then and I'll say it again, that this is not really achievable. Honestly, 750 billion worth of energy to buy from the US, and like over 3 years, 250 billion each year, and then like 600 billion of goods, and also have your tariffs, or have your products on tariffed by the US. That's really like very unfavorable. So I don't know if all the countries in the EU would have agree with that, and because this deal still needs to go through clearance, I would say. So I think that the fact that we're seeing these cracks in EU US deal, normally I would say, you would see the White House administration straight away attacking, saying, "Oh my God, like this is not what we agreed on." But given that the geopolitics right now, I think that they're kind of calming down a little bit. I'm talking about the U.S. In order to find, in order to kind of, not to keep the EU as friends, still. So yeah, again, it's an interesting chess game that everybody's playing. Who's going to be the winner? I think no one, in general. In general, I think that it's nobody's a winner in geopolitics. There's you eventually, okay, you can be like, a short-term winner in some sort of like a little battle, but is the war won? No, I think that the war, the so-called war, will be ongoing, and there will never be a winner in that war. I think it's infinite. Anyway, just my little thoughts here. So Japan, yes, enjoying the tariff reduction on cars. There we go. We know that Japan's industry is quite good with cars. Almost using the words of you know who. Anyway, but yes. So at the moment, look, the market is big. Japan does export a lot into the U.S. In the U.S., Japanese cars are loved because of their quality, and that's understandable. So this is a good sign. So I think that this could work well for Japan here. Anyway, jumping into China. So yes, we're still in the box. A China 50 A50 index here. And we are still in the box. Look, I talked about this in the beginning of this week, and I said, look, while we remain inside this pattern in this box, or in a range, I will kind of stay flat here a little bit. I'm not going to do anything. Yes, we got a clearance of the lower side, but this is what happens occasionally. These are these false breakouts, which I do like them, and they give me some sort of like a indication here that maybe we're not really ready to go lower here, because it was a false breakout, another false breakout today, and there we go. Look at this, boom, to the upside. Am I getting very bullish? In a way, inside the pattern, yes, but I'm aiming for the upper side first, and near that 15,000 zone, and then we'll take it from there. So this idea worked out, the rebound here. Now the next idea for me is the breakout through the 15,000 mark. If we can get that move, amazing. More buyers here could join in if we get that push above the 15,000 zone. A drop below the 14,000 kind of 600-ish zone, yep, could open the door to some lower levels. Let's jump into US indices, and of course we're watching those very, very carefully. Look at this craziness. Okay, I had this upside line. It got violated this week, but on a daily chart, it doesn't look very nice. The only thing what looks nice here is this 45,000 kind of 70s zone, and look at this. We did flirt with that a little bit, and then we rebounded because it kind of provided good support. The bulls decided not to give up here, and we pushed back above this upside line. So on a daily chart, this upside line doesn't look very attractive. On the weekly chart, you'll get a nice little false breakout. So this is, I think it's quite doable, quite good, quite workable. And if you're asking workable in which way, well, basically examining a new all-time high. So I will give you my theory again on these US indices. Whenever one goes for an all-time high, then the other goes for an all-time high, and then the third gets, it eventually kind of hits the all-time high, and then we see some sort of like a correction back down. So at the moment, what we're seeing here is, again, another box here, another range. So the Dow Jones Industrial Average here is quite interesting. We are, we're moving sideways here. This upside line, let me just get rid of this. This upside line, like I said, I'll get rid of it because I think this is a little bit more important. So if you're looking for some higher levels, pretty straightforward, honestly. Clearance is needed. If we can get that clearance, if we can get that move above the upper side here, above the current all-time high, yes, I'm leaning towards the upside. 46,000 is my next target. Now, because another little issue here, because 46,000 is the quite an attractive level here on the cash index, what could happen in a way, and this is what I also, one of my theories that I mentioned, is that we could see a pop here. Let's say the NFP comes out, on the actually with the NFP, if the NFP comes out on the lower or on the higher side, it's a positive. It's a positive. The market is doing great, and we could see that push to the upside. If the number comes out on the lower side, on the below this forecast, in a way that could also be seen as a positive. Why? Because then we could shift towards seeing like a 50 basis point cut for basically 2 rate cuts. And this actually could drive the market higher. We could test that 46,000 zone, but because the number is on the lower side, everybody would click for everybody. Oh, like, oh crap, it's a bad number. Actually, let's bring everything down. So what we could get here is a strong push to the upside, a touch of the area near the 46,000, and then by the end of the day, everybody realizes no, that's actually like a very bad number, and let's sell off, and then we shift back below the previous all-time high, this one right here, which is the current all-time high. So and then that would signal to me a possible reversal. So long story short, at the moment I'm kind of having that idea in my head. Again, I don't have a crystal ball. I don't know. I cannot see the future. So I'm an analyst. I'm trying to apply previous activity, previous events or results to current ones. So that's where we're trying to gauge that appropriately. The S&P 500 all-time high, beautiful move. We're in this rising veg pattern, and I talked about this. Look, at the beginning of this week on Tuesday, we did clear the lower side of that rising veg, but it was a nice, beautiful false breakout. Look at this beautiful rebound, push back up. Amazing. Everything is looking very, very interesting for the downside, because again, according to all the TA rules, such patterns tend to break to the downside. However, if we can get that break first, then we'll get a little bit more comfortable. But because what I said before, that whenever we stay inside the pattern, we could still drift in that direction. So the current direction of the rising wedges to the upside. So that means that we could go a little bit higher. But again, such patterns tend to break to the downside. And hey, I don't want to, like I said, I don't want to rush into things again. And also, maybe we could see a pop here, a move higher and clearance of the upper side. But then if we somehow, by the end of the day, drift back inside the pattern, we'll get ourselves a nice false breakout, but now to the upside. So just kind of proves to me that this is a very important pattern to watch. NASDAQ. Now, NASDAQ is also very interesting. We're not very far from the all-time high. So in a way, what I keep on saying is that, look, I do believe in another rally, and if I do believe if if Dow wants to go hit a new all-time high, S&P is already hitting. So if S&P is already hitting, Dow is the next one in line because it's very close to that to hit the new all-time high. That's fine. It's doable, very simple, honestly. And NASDAQ is still further away, however, also doable. So in a way, what I'm looking at, like I said, what I'm looking at is that, S&P is going to be staying somewhere around the current all-time highs. Dow could push to the upside, and NASDAQ could start chasing. I don't know if it's going to happen, let's say today. Maybe we'll wait for Monday or something like that, or the beginning of next week to do that, and then we could see a reversal back down. So long story short, for now, um, for now, it's a very interesting moment here, I would say, and everything is doable. Everything is quite okay-ish. And look, I would say it this way: if we're looking for some higher levels, it's possible. Today is, I think, is a good day for that, because in my opinion, again, I might be wrong, but like if the number comes out on the lower side, then it's good, because again, we could see, a probability for a 50 basis point cut, and that, that could be seen as a positive for the stock market. But again, that would be temporary positivity. If we see a higher number, that's also positive. So, it's also great. The market is doing okay, resilient, and we could see that pop higher as well. Maybe it's just the way the reaction of that pop, So on the higher number than the forecast, then the indices could go up and stay there. On the lower number than the forecast, the indices could pop higher, but then briefly stay there on the upside and then reverse back down. Again, theory. Let's see if practice is going to be in practice. Let's see how it's going to come out in practice. US dollar index very quickly. So we're kind of hugging this downside line here, and for now, I would say this way. For now, it's an interesting moment here, and for now, it's the downside line, which I'm watching here, and I'm watching this 100-day EMA as well, because again, we're kind of hugging the downside line. We're hugging the 50-day EMA shown as the green line, and maybe, just maybe, we're forming something of a bullish flag here. Like, again, I don't want to say anything, but there is a chance for this one to pop higher. However, there's the same chance for this one to move lower. But for me, the downside scenario is I'm gonna wait for that drop below the 97.40 zone here, and then we'll take it from there. The German index DAX, beautiful hold up near the 100-day EMA. Amazing, beautiful rebound, pushed back up here. So the 100-day EMA becomes the important barrier for the downside. If we can clear it, we'll go higher. We'll go lower. For the upside, look, let's clear up the chart a little bit. So actually, I do like these two levels. This we can remove, no longer needed. This is still a good area to watch. This 23,922. Some of you might say, but hey, what about just the 24,000 zone? And yes, it's currently very close to that 50-day EMA. So if you are comfortable with waiting for a push above the 24,000 zone on the cash index here, then yes, great, be my guest. I'm just saying that we could already start looking at slightly higher levels from this on the break of this 23,922 zone. We're currently here. We're currently moving lower, so we're seeing a little bit of a retracement right now, but not everything is lost here for the bulls, because if we somehow stay above this inside swing high of the 3rd of September, which is around 23,700. So if we do stay above that area, I'm considering a move back up. For me, like I said, the downside is on a drop below the 100-day EMA, but if we somehow struggle to move below the 23,700, yep, I'm considering a little bit of a move to the upside. Let's jump into the FTSE 100 very quickly. Yep, weird, beautiful rebound, push back up. Look, it's a little bit of a mess here, but I would say if you're looking for some lower levels, a drop below the 50-day EMA would be needed. Look, for me, it's the interesting bit here is that if we do fall below the 9,100 zone, we fall below the 50-day EMA, then that could attract more sellers into the game. Long story short, for now, if you're looking for some higher levels, then certainly I'm keeping an eye on this 9,227-ish. But I think we need to change that a little bit, because I think that we need to look at something. You know what? No, neither of these levels are really attracting me here very much. So, what do you do in this case? I apply my beloved Fibonacci retracement, and I'll see where we are at. Look at this. beautiful, 50% retracement, amazing. So very simple. If we push above this 50% where we are currently, I'm leaning towards that 61.8, and we clear that one, I'm leaning towards the all-time high again. Very simple. I think that this is, whenever you, like, we're struggling to find some sort of like support and resistance, good levels here, you know, Fibonacci to the rescue. Not only retracement, extension as well. So let's get rid of this for now, and we'll unclutter the chart, and we'll take a look at from that perspective. Let's jump into forex very quickly. AUDUSD. Let's have a look what's happening here. We're still in the box. We need to look. I'm not going to spend too much time on this because again, a lot will depend on the US dollar. So I'm just going to quickly tell you about the technicals here. So look, I mean, my upside scenario is on a break of above the 0.6568. On the downside, the drop below the 0.6418 is the one that I'm watching. AUDNZD, ooh, I like this one. Look at this. Look how technical it is. I talked about this and I said, look, I have this rising channel on the chart, and it's providing good resistance, and certainly it's an interesting moment here. Look, I would say this way, if you're looking for some lower levels, I think there is a good chance for having that. We are struggling to overcome the upper side of the rising channel, and by the way, don't forget that the rising channel is quite steep here, probably I would say maybe like 45 degrees, and we're struggling to overcome that steepness, so you know, to become even more steeper on the chart. We're struggling with that. So in a way, maybe there's a little bit of a chance for a bit of a retracement back down. And also, this is a nice formation here. And if you remember, I talked about these formations where whenever we have a strong decline and then followed by a gradual decline, we get a push higher. I've said this several times in my previous videos, if you remember, like for example, here as well, a strong drop first, gradual decline, and then a push higher. Strong push higher, gradual increase. You follow me, right? I'm not saying that this is going to work 100% or no, but just following the previous logic. AUDJPY, beautiful clearance of this upper side of the falling channel, and we're now struggling with this 97.4243 zone. If we can get a nice clearance of that, amazing. I'll go to the upside. NZD/USD, we're stuck, still somewhat bearish here, but I really don't like it nowhere here, unless it's going to start falling below the 0.58 territory here somewhere. Then yeah, I'm going to consider a move lower. NZD/JPY, interesting, this downside line. So if we got a break on the AUDJPY, if you missed it, if we are going to see the risk on sentiment prevailing in the market, then we could see AUDJPY pushing higher, meaning that NZD/JPY could also push higher. And if we're playing this game where the NZD is playing the catch-up game, so you know, okay, now you be a little bit stronger, okay, now I'm going to be a little bit stronger. So in this case, AUD/NZD, that supports this idea of a move lower, because then NZD could become a little bit stronger. It would be their turn to become a little bit stronger for some time, you know. So, like I said, very interesting developments right there. USDJPY, oh my God, look at this flirting moment here with the upper side of this range, and boom, false breakout, another false breakout. I mean, give me a good move here, and I think this is the teasing moment. I think there's a lot of people getting frustrated here, a lot of stop losses getting triggered. Look, I need the body of the daily candle remaining above this area. As long as it stays above it, yep, we could continue targeting the upside. But of course, NFPs today, so it could go in either way. USDCAD, now this is the pair we're all watching very carefully, very closely, because again, it's it's not only US data, job data, but also Canada's data. So I'm readjusting a little bit the levels here, because again, those have shifted. The chart has shifted, so we need to adjust here. And still, my upside scenario remains valid here. It's above the 200-day EMA, above the 1.3879 zone. So hey, if we can push above the 200-day EMA, then yes, I'll go to the upside. USDCHF, we're stuck here. We're still coiling up, so we're waiting for the pair to make an exit. Let's jump into EURUSD very quickly. Still, oh, bearish flag alert. Okay, so that means that we're expecting maybe a stronger US dollar. Right, okay, we'll see. Let's see if this is going to work out. Look, with the poll, the little correction. If it could be the bearish flag, but still a confirmation break is needed. And I said before, and I'll say it again, my bearishness could come on a break below the 50-day EMA here shown as the green line. If we can get that clearance, amazing. More sellers here could join in. For the upside, a break of this downside line could do the trick. And if we can get that move above this downside line, then yes, great, more buyers could join in. EURODJPY pushing, trying to make its way higher here, but again, this hurdle is providing good resistance, the 173. We had a few false breakouts. Now we're seeing, let's see if we can go again above that 173 zone, and if we can, then yes, the next target is the current highest point of this year, near the 173.90 zone, somewhere around here. Jumping into GBPUSD, looking at this one, and yeah, this one is quite an attractive here moment. Again, similar story, bearish flag alert, but a confirmation break below the 100-day EMA is required. Yep, let me stretch out a little bit. So yeah, keeping an eye on this one. The 1.3370 is something that I'm watching, and it's going to be an interesting moment here if we do clear this hurdle, because at the same time we clear the 100-day EMA. More sellers could join in. For me to get positive on this one. Now look, if you remember last week, I was also talking about this when I said that it looks like a possible inverted head and shoulders pattern. Left shoulder here, head, right shoulder, but we didn't really clear the headline. Oh, sorry, the neckline. But what's interesting here is that what I said to you as well, that if we do fall and stay below this area, below that 1.3370, ignore the whole inverted head and shoulders pattern. You see, we're struggling to stay below this area. So I'm not saying that this is still in play, but maybe instead of, let's say, just focusing on the whole point of an inverted head and shoulders, just keep your eyes on this hurdle here, the 1.3585. If we just clear it, yeah, we'll go higher. But if we don't, that's fine. We're stuck in a range here, somewhat of a range, so we're waiting for that clearance. But again, yes, wait for the numbers today to come out. GBPJPY, yes, approaching very important area of resistance right here between around the 200 zone. So just pretty straightforward. The clearance of the 200 could attract more buyers into the game. Period. Honestly, let's not overthink this, because we're forming higher highs and higher lows. And hey, let's see if we can go for that higher high now. Let's jump into the commodity world. Gold, looking good here. Look at this gold. Again, I don't want to touch this until the NFP comes out and until I see the reaction. Because look, we have been in such a scenario before where we went for an all-time high, when we cleared, for example, this area, we went to high, we were like, oh my god, are we getting towards that 3,000? And everybody's like, yeah, sure, and then we cleared this area right here, we cleared the 3,000 zone. We rallied above this hurdle. There we go. This is the one I'm talking about. This is the breakout. We had the 3,100 and 67? Yep, 67, 68. We cleared this, and then we started pushing higher and higher, and everybody's like, no way, this is way too much. And from this area to go all the way to the 3,500, now that was a spectacular move. A lot of stop losses got triggered here, and basically this was a decent move here to the upside. Let me just check how much was it. Around 10% here. There we go. So around 10% up until this point right there. And yeah, this is something that people were not really maybe expecting in a way. You get, okay, you were already above 3,000, psychological 3,000, and how much more? And this is where it kept on going and going and going, and another 10%. That's a lot for gold, and there we go. We hit that all-time high, which we surpassed, by the way, which we surpassed this week, the 3,500. So now, like I said, yesterday we saw the retracement. By the way, we broke the area and we retraced yesterday a little bit, came very close to that zone, and then we reversed back up. So is the new area, is the new target 4,000? I think that that's quite doable. I think that's doable, and but again, I'm very careful on this, because whenever everybody starts seeing that, then you should be worried, because again, if everybody starts seeing that, everybody's like, okay. Again, sometimes it works, sometimes it doesn't, and sometimes it backfires. So unfortunately, that's trading. Yeah, well, it's always 50-50, but well, almost. Look, very simple. If we do clear the current all-time high, which is around the 3,578, I'll go to the upside. Very straightforward here. In terms of other levels, okay, if we're looking for some lower levels, I need to drop back below the 3,500. If I can get that move, then then we'll see a nice reversal. Could be seeing a nice reversal back to the 3,430, 50 zone right here. And what I'm curious about actually is the weekly candle. Is this weekly candle today going to stay below that 3,500? If it does, then I'm considering maybe a bit of a retracement going into next week. But if it doesn't, if we stay above that 3,500, which was the previous all-time high, then yep, up and away. Silver, 40, yes, we've drifted back below the 41 zone, but in general we remain above the psychological 40 zone, $40 mark. So long story short, if you're looking for some higher levels, there is a chance of seeing that, and but again, we need to push above the 41.45 area here in order to go further north. Palladium, this one did the retracement of 38.2. I was talking about this on Wednesday. Excuse me. We did that move. That's great, wonderful. I was hoping maybe to see a push above the 38.2, but that's fine. We actually fell back below the 23.6, and that's where the worrying sign is. So sometimes you look for clarity in these other metals, basically. Platinum, let's have a look at this one. Look at this beautiful reversal, strong reversal back inside the pattern here, back inside this rising wedge pattern, which I talked about previously. And I said to you that this is a bearish indication, which which could lead to some lower levels. And the fact that we have drifted back inside of this, again, I do understand this is quite ugly. We violated. Maybe we should ignore the rising wedge pattern here. But once again, a weekly chart to the rescue. Look at this. Is that a false breakout? That is a false breakout. Let's see if it's going to stay like this. If we can stay inside this pattern, maybe, like I said, this looks a little bit more clear, right? In order to understand that this could be a possible bearish flag or bearish pennant or whatever, but basically a bearish indication. So let's see if this is going to be the case. And that's what I'm saying. That's why I'm not kind of discouraging here the downside scenario on gold. However, what I say, you should jump in straight away. No. It could backfire. It doesn't always correlate. These other metals do not always correlate with gold and silver, because again, gold and silver have a little bit of a different status. They're they're traded more heavily. Anyway, so yeah, keep your eyes on this gold. Keep your eyes on the other precious metals, because these could kind of give you a little bit of an indication of what could happen next. Copper, one of the other elements that I really like here, and a lot of metals that I like. And look, we came very close to testing the 23.6 again. I think we need to take this as a success in a way. It came very close to that, so I always say that it's never the exact level, it's always the area near that level. And there we go, we kind of came close. So it's not ideal, but we can live with it, because if we start falling back below the 4.54 zone somewhere here, I think I'm gonna start considering this as a bearish indication again. And look, in general, it looks like a bearish flag. So big pole, big correction to the side here. Yeah, you know the drill. Oil, beautiful $65 mark. We fell back below it, and not only that, we fell also below the $64 mark. So this whole range, this whole area between the 64 and 65 levels, I said to you previously that this is my kind of, you know, important zone which I'm looking at. It's an area of support which now kind of could become resistance, but this week we kind of violated it a little bit. We pushed higher. We tested the broken trend line. What's interesting here, which is drawn from the low of the 24th of June, we tested the broken trend line, and this is another theory that I follow, that whenever we break a trend line, we tend to revisit it from the other side. So we're, like I said, looking at this. The market's getting fearful because, again, OPEC plus meeting this weekend. Everybody's, you know, preparing for some more production, and, you know, hence more supply, same demand, more supply, lower prices. I don't know, economics. Anyway, so yeah, that's what we're seeing right now. So I think that I'll stick to the same game plan, that as long as we stay below my highlighted zone right here, which is between 64 and 65 levels, I'm leaning towards the downside. In general, I'm still in favor of that $60 mark, and I think that that's the one that we could be watching. Natural gas. Natural gas is an interesting one here. We remained above the 3 zone, so hey, looks quite positive. So hey, we're seeing a push higher, so I will stick to the upside. As long as we remain above the 3 level here, I will stick to the upside. Coffee. Coffee is, yeah, it's near this very interesting moment here, and it's near the 23.6. So basically, the 23.6 is providing good support. So my beloved coffee is holding on nicely here above the 23.6. Now look, I said it before, I'll say it again. A drop below that 23.6 is required in order for me to consider a larger correction back down. There we go. Period. For the upside, I need to see a push above this downside line. Yep, downside line taken from the highest point of February. If we can get that move, amazing, more buyers could join in. Cocoa. Cocoa remained below my area right here, below that 7,636.65. As long as we remain below that area, then yes, I'm going to continue targeting the downside. Wheat. Wheat has fallen below the 520 area, so I'm going to remain somewhat bearish, but not too bearish here, because again, this 506 is the next target for me. Sugar. Now this one I like. Look at this. My another commodity that I really like is sugar, and there we go. Finally broke the upside line, which I talked about, and this, of course, to me, I'm loving this move because, again, it provides me an opportunity to step in at a later stage. However, I need that confirmation, you know, reversal. So at the moment, everything is pointing more towards the downside. We're coming closer to that 15.5 zone. If we clear it, I'll go lower. If we struggle to clear this area, then maybe we'll create something of a double bottom here, from where we could reverse and push back up. So this is basically what I am considering here for now. So yeah, let's see what's going to happen here. It's an interesting moment, and hey, 15.5 zone. Let's see if what's going to happen with that one. Very quickly on cotton, holding on nicely near this 65.73. If we clear it, I'm going lower, but again, I need to control my appetite, and I'm just need to aim for this area. Ladies and gentlemen, and finally for dessert, let's take a look at the crypto world very quickly. 113, there we go. We're pushing above my barrier, which I talked about a lot, and this was the 112 zone. So we're pushing back above the 112 here, and of course this looks like somewhat of a positive sign. Again, I'm not rushing into things. We're still below we're still below my 50-day EMA. Maybe this is going to be just a little, you know, hold up here, but certainly that's the first indication that there is positivity. Bitcoin Cash, beautiful. Bitcoin Cash is really attractive, honestly. It's like really interesting. It makes these nice moves, but now, look, we broke the downside line. I talked about this previously. I said that if we do break this downside line, first of all, if we get back into the rising channel, And then if we break the downside line, then I'm leaning towards the upside. Yes, I'm still cautiously bullish on this one. I have to stay. Although actually I would wish to see a little bit of a larger correction in the cryptos, but maybe that was it. Yeah, if we do now clear the 605 zone right here, then yeah, I'm gonna go to the upside. Ethereum is at a very interesting spot here as well, and certainly yes, we're rebounding nicely right now from this upside line. So the question is for me, if can we actually push higher here? Well, for that, I think I'm going to look at this little hurdle, this 4,500. Nice, beautiful area, 4,500. Get a nice. If we get a nice clearance of that, I will go to the upside. Ripple. Now, Ripple is pushing back up, but of course, what we're watching on Ripple is that psychological 3 level. If we do get a push above the 3 level, we could also get a push above this downside line. So this way, more buyers here could join in. So while we remain in this area, to be honest, I'm not really getting very comfortable with Ripple because it's very close to the 100-day EMA here, and if that gets cleared, yeah, it's still, you know, there is still a possibility for a move lower. Litecoin approaching this downside line once again. Let's see if we can break it. Period. Honestly, very simple. If we can break the downside line, I'm leaning towards the upside. Dogecoin. Dogecoin is also at an interesting spot here, and we are looking at the this downside line here. If we can get a nice clearance, and then yes, I would say more buyers here could join in. But at the moment, we're stuck. There is still a chance for a move lower, but again, for a move lower, I need to see a drop below the 200-day EMA, and then we'll just kind of take it from there. Polkadot is an interesting one here as well, and certainly we're currently like kind of coiling up here, and yep, we're still below all the EMAs on my daily chart. And if we're gonna get a nice drop here below this 3.66 zone here, and if we can get that move, amazing. More sellers here could join in my opinion. But at the moment, we're stuck in this triangle pattern, so we're waiting for another good clearance. Not like something like this here, but because this, again, on the weekly, you'll see that it was a nice little false breakout. So let's keep an eye on this daily chart. Let's keep an eye on the weekly chart. On the weekly, it would be nice to see clearance through one of the sides. We would like to see the body of the weekly candle remaining outside of the triangle pattern. Then we could get maybe a little bit more comfortable with the next short-term directional move. But something tells me that I think if we would get a move, then we would get a move. There would be a strong one straight away. So just continue monitoring this daily, and we manage your risk appropriately. And finally, Tron. Tron is still holding above this hurdle, this 0.3320, and above this 50-day EMA. If we continue to trade above that area, then certainly, then yes, more. I wouldn't say more buyers. No, the buyers could step in, but probably they could step in if we do push back above the 0.343940 zone right here, I think. Because again, that area in the past was a good area of resistance. So if we clear that one, we could push back up. But at the moment, we're flirting with the 0.3320 with this 50-day EMA. If we fall below that, I will lean towards the downside, ladies and gentlemen. So, ladies and gentlemen, that's it. That's a wrap. Thank you very much for watching and listening. My voice is now going down, so I think it's time for me to end the video. So thank you for watching. Thank you for listening. I really appreciate that. So I hope you found this session useful. As always, ladies and gentlemen, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And keep your eyes on the job numbers today. And don't be surprised if we somehow get a one-way traffic in one of the top traded instruments. So manage your risk accordingly. Thank you very much, and I'll see you on Monday. Bye for now.